Your Excellencies, Ministers, Ambassador, Mrs. Nassika, distinguished guests, ladies and gentlemen, welcome to the Infrastructure and Utilities panel in this year's Capital Investment Forum. I would like to thank personally and on behalf of our law firm, Capital Link, Mrs. and Mr. Bornozi, for this kind invitation to moderate this even one of the most interesting panels of this forum. And I support this by saying that Greece has evolved into one of Europe's most promising destinations for infrastructure and utility development, supported by strategic geographic position, strong transport networks, and sustained public and private investment. Over the past few years, the country has taken serious initiatives in order to modernize key sectors, aiming to create a robust environment for long-term growth. Major upgrades in highways, ports, and airports have strengthened Greece's role as a regional logistic gateway and as a cross-path connecting Europe, Asia, and Africa. At the same time, the country is driving one of Europe's most ambitious energy transition, investing in renewable power generation, smart grids, and cross-border interconnections that boost energy security and export potential. Digital transformation projects have also reshaped the competitiveness of business and public services. Yet, despite all the progress, Greece is now entering a crucial next phase, one that requires continued and targeted investment. Opportunities still remain in expanding renewable energy capacity, strengthening climate-resilient infrastructure, upgrading regional transport links, enhancing healthcare service, and further modernizing water and water management systems. Especially as concerns the latter, we are all aware that in the midst of the increasing pressures on water resources, these investments have become a top priority and for the modernization of the systems. And it goes without saying that these needs create a fertile ground for investors. Of course, we all are aware that the key investment checklist includes political stability and predictability, including macroeconomic, legal and regulatory stability, and, of course, future-oriented projects that will be backed by EU funding frameworks and strong government support. And as a last comment, in the era of innovation, of course, the skilled workforce is also essential. So I think we all need to salute all the initiatives that have taken place these days in the US for the brain gain incentive. So having said that, we have the privilege of welcoming 5 distinguished speakers, top tiers, to this panel who will guide us through the infrastructure and utilities investment landscape in Greece and provide insights into what lies ahead in this sector. So I warmly welcome Mrs. Penelope Lazaridou, Executive Director, Executive BOD Member, and General Financial Manager of TERNA Group of Companies, Mr. Antonis Mitzalis, Executive Director of AVAX Group, Mr. Piotr Mietkowski, Head of Investment Banking, Central and Eastern Europe, Greece, Turkey, in Paribas Group, Mr. Sachinis, CEO of Athens Water Supply and Sewerage Company, SA, the well-known EYDAP, and of course, Mr. Manolis Sigalas, Senior Vice President and Managing Director of Europe in Hills International. And I will start with you, Mrs. Lazaridou. You're representing a leading entity in all the infrastructure projects that have taken place in Greece during the last years. So, during the last 15 years, I think we all acknowledge that Greece's infrastructure agenda was overwhelmed by large motorway projects in transport links. What is the new, or what should be the new infrastructure strategic plan for Greece, in your view? And what are the enablers for such an infrastructure plan to be successfully deployed? The floor is yours.
Thank you. I echo your comment about motorways in Greece and paraphrasing the well-known phrase, drill, baby, drill. In Greece, it was drive, baby, drive during the last 15 years. So, ladies and gentlemen, I wish all of you the 3 H's: health, harmony, and happiness. Going back to your first point, to your first question, and before getting into the gist of it, let's try a very quick flashback on the landmark infrastructure in Greece, and then I will try to visualize country's infrastructure landscape for the next decade. So, indeed, over the past decade, Greece focused on infrastructure. Few or a couple over the past decade of the emblematic infrastructure included the holy grail of privatizations in the concession of Attiki Odos to Yekterna, the Yekterna concession motorways of Ionia Odos and central Greece, that will continue to contribute a significant impact for the central and western Greece by improving accessibility, mobility, safeness, and economic growth. The upgrade of the tourism offering by transforming the regional airports, but very correct point, what about the next decade? What are the infrastructure themes in which Europe and Greece will be tuned in? At EU level, there is a shift, clear shift, towards balancing energy security and prioritizing networks, grid stability and critical infrastructure instead of the pure renewable expansion. This brings focus of the assets like airports that should be more energy efficient, grid infrastructure supportive massive renewable integration, electricity storage, water salination, waste systems, smart mobility system, and yes, again, motorways, but transportation works that operates in a more environmental compliant way. All these are highlighted in the Draghi report, which mention that in order Europe to stay competitive, needs 800 billion per year in additional investment from grids and energy security to digital and transport infrastructure. Taking this and translating this in Greek, projects that are expected to be completed in our country in the near future are the country's second largest gateway, developing by Yekterna in Kastelli, Crete, built by TERNA to serve more than 15 million passengers annually. The North Axis of Crete, developing by Yekterna, Europe's largest greenfield motorway, around 2 billion capex, that will really restore Crete. The Egnatiodos motorway, developing by Yekterna again, 800 kilometers connecting Greece with 3 of its neighboring countries, and with the addition of this concession to our portfolio, make us the market leader with over 2,000 kilometers in operation. Extension of Attica motorways. This is very important because it will help to address the congestion issue in Athens, and for which our group has already submitted unsolicited proposals. Water treatment and water management projects, infrastructure that will be required to address climate change challenges with a decent capex of more than 5 billion. Waste management project and waste-to-energy management project. The group is a key player also in this sector with 2 operating facilities and additional 2 other development facilities. Next generation renewable energy project, the well-known pumped storage, hydro and offshore, where already our group has an agreement with Master for co-development projects. Within this portfolio, the Amphilochia pumped storage, 800 megawatt, stands out as one of the largest similar infrastructures in Europe. All in all, Greece needs to tender project over than 15 billion in new environmental and climate resilient infrastructure over the next 3-5 years. All these assets are not only construction-wise demanding projects. They are technology-enabled projects, high performance, infrastructure that combines civil works with advanced digital and energy technologies. So now you had about your second point, about your second question, related with the factors that will enable the new infrastructure plan. Things, I would say, that seems quite straightforward, but not easy. Why? First, the macro and political environment of the country needs to maintain its upgrading momentum, the former, and its stability, the latter. On the upside, Greece is now investment grade. S&P and Fitch now rating the country at BBB, 2 notches into investment grade territory. Within EU zone, top GDP growth and low inflation rate. Local banking liquidity is at its peak. Unemployment rate at the lowest rate since 2009. And there are also new European funds like the Social Climate Fund, the Modernization Fund, the Decarbonization Fund, that will support financially with an amount more than 8 billion various development initiatives over the next 5 to 7 years until 2032, I think. But we have also the downside. On the downside, government needs to promote more intensely its reform agenda, judicial, digital projects, everything that has to do with land planning, permits, licenses, tenders, progress of unsolicited proposals need to modernize and accelerate, while taxation needs to stabilize and become friendlier for both local and foreign investors. National elections are approaching in 2027, and there is no room for political uncertainty. European funds like RRF ends in 2026 with an amount left unallocated. There are discussions to reroute unallocated funds to new programs like the defense, but countries like Greece have such amount unutilized. It's an issue, so to speak, of concern. Second, there is strong investor appetite for infrastructure risk in Greece. These signs that front are indeed, I would say, promising. Well-structured projects with credible sponsors attract strategic international partners and global financial institutions, as was the case with the TERNA Energy and Masdar deal, as was the case also with the recent TERNA bond issue covered to be a significant extent by institutional and private investors. And another tailwind for investors, strong appetite, is that liquidity across Europe is ample, with a lot of capital directed to multidimensional infrastructure works addressing environmental and climate challenges. So also, we have to mention that contrary to the previous year, infrastructure investment enthusiasts are not limited to foreign investors. We can see that local private equities and family offices are also heating up to invest in asset classes such as concession, PPPs, logistic, water management, waste, regional airports, and drawing by our own example, during the last 7-8 years, TERNA invested 3 billion of own capital coming from internal cash flow generation and redeploying proceeds from assets. Third, experienced and knowledgeable sponsors with the ability to identify, to fund, to deliver complex projects, while at the same time command the strategic 360 vision to contribute in the formulation of the national infrastructure strategy.
This is a very interesting point that we can keep, I think, for the discussion.
It's about the presence that the companies have to be in the region for the next decades. Of course, without being too biased, I believe that in TERNA, we are fortunate enough to have such a sponsor. Last but not least, the formation of an holistic approach ecosystem that controls and manages the full life cycle of an infrastructure asset is very critical for the successful implementation of a strategic and successful infrastructure plan. Development, construction, operation, optimization, and transfer are the repeated steps that all participants must be able to perform for an infrastructure market to remain vibrant and to remain prosperous, adding to countries' productivity and power. At TERNA, our purpose has already been crystal clear so far, to invest in Greece's future and to shape a more connected, more sustainable, and more competitive country. Thank you very much for the opportunity to...
Thank you, Ms. Lazaridou, for this valuable insight. And now I'm giving the floor to Mr. Mitzalis. You represent a leading group with a very diverse portfolio in infrastructure. What's your view? What should be the priorities in Greece for the new infrastructure projects? And what are the factors that you think that will most influence these projects, particularly regarding project feasibility, financing structures, regulatory conditions, partnership models, or anticipated commercial returns?
More or less, we see it very similarly to the way Mrs. Lazaridou analyzed before. Greece now has a top-quality road network, which puts our country at the highest level, I would say, around the world, not only the EU, for the primary road network, that is. We need to maintain and improve the secondary road network. And also we need to expand and be able to add more energy resources to the energy grid. Waste management and water management are things where we're behind, and I'm sure Mr. Sachinis will expand on water. The second backbone of the connectivity grid in Greece needs to improve, and that is the railway network, on which we believe that a public-private partnership is the way to go forward. Now, as far as the factors that might affect this, in Greece, the reality is that the top factor is governmental stability. Mm-hmm. And that is because we also lack policy consensus on infrastructure between when there is, that's a risk when there is government change. I hope that this will not be the case in the future, in the coming years, because the Greek construction sector and infrastructure sector needs stability, because there is a lot of investment still required, and a lot of investment which we lost in previous years, and we need to do now. We are happy to have a very mature PPP and concessions market. It is an industry by itself, and I want to say that it is not only a means to bring new infrastructure, it is a mature industry which needs to be provided with new projects. The risk in infrastructure projects in Greece, as far as regulation is concerned, is always a challenge. We must continue striving to become better, and by that I mean faster and more diligent in how we prepare projects. Be it permitting or stakeholder management, they can cause huge delays. And there is a very recent example of how the Greek contractors were successful in delivering fast. The Patra-Pyrgos highway had some issues at start, but at some point all these were gone. AVAX built 10 kilometers in 3 months. TERNA had time to spare. when we were building this highway. This is the way forward. We have the capacity to expand. We need new people, either from other sectors in Greece or abroad, but anyway, the outlook is very positive.
Thank you very much for this insight. I think, and we'll also keep a note for this regulatory stability and the political stability that we all need in order this project to run. So
it's like change of management in a company every 2 or 3 years.
It takes a time to adapt. Of course, now I think it's time to hear, I think we hear the views of 2 major companies that perform a lot of projects. Now, let's hear the view of the markets, the people that will finance these projects. Mr. Mietkowski, do you think that the infrastructure play in Greece, as it is planned, is it going to be a magnet for global investors?
Well, I don't think we'd have.
Will you put the money of your bank here in Greece for this kind of project?
I don't think we'd have a full room if that would be the case. Now, listen, Alexandros, thanks a lot for having me here. It's always a pleasure to speak at this conference and to talk about investment landscape in Greece. The sector has been showing remarkable momentum and in terms of capital inflow, scale, and diversity of the projects. So we had Penelope and Antonis spoke about how it looks from investor perspective. I'm a banker, so let me maybe take the bank's stance on that. Clearly, what's very spectacular is the scope of the pickup. We once again, I think the room testifies and the agenda testifies that. Infrastructure investment is really the hot topic of the day. And for the last couple of years, Greece has repositioned itself not only as a domestic market, but very much a strategic gateway to southeastern and central Europe. Investors view Greek infrastructure, whatever, energy, infrastructure, digital, ports, transportation, healthcare, you name it. They view it as regional platforms, as something that has a cross-border relevance. And I think we feel that this shift has been one of the absolute key drivers in interest that we are seeing today. One of the first clearest signals of the interest is obviously coming from renewables. We have seen headline transactions. I think somebody mentioned already before, TERNA energy acquisition by Masdar. There have been few others. They have all set the new benchmarks in terms of valuation and new benchmarks in terms of maturity of the market. BNP Paribas, we had the pleasure of advising on the sale of 50% stake of Enel to Macquarie. We are right now working with another global energy player who's reviewing its portfolio in Greece. And clearly, what we can say is we see a very strong interest, very strong trend and appetite of investors for this type of assets in Greece, and that's kind of confirmed over again. Investors are looking at renewable projects. They provide scale, they provide visibility, they provide long-term bankability, so all key elements for investors. We have international institutions, EIB, BRD, who are very active, extremely active in Greece. That provides the risking of the projects, that clearly provides lowering the cost of capital, which again, another point which is important for investor. Energy security, it's another theme I think we keep hearing over again. We see a lot of developments along the Poulis, but many others with LNG and gas infrastructure that is now deeply linked to the theme of European energy diversification. Investors took the regas capacities, they have the long-term supply agreements. Those are the projects that provide a strategic relevance and long-term revenue profile. And I think we see that also in a grid, we see that in interconnect, it's somehow a recurrent theme all across the market. Ports and logistics are always a kind of high conviction themes in Greece, and it's still the case today. Piraeus, Thessaloniki, many others, a lot of inbound interest from investors for those assets, and I think they also benefit from growing trading volumes. They benefit from overall reshaping of the supply chain towards Eastern Mediterranean. We start seeing domestic consolidation. Incumbent players are acquiring renewable portfolio, development pipelines. One more time, it's a scale team. It's something that improves credit quality and creates opportunity for international investors to partner or to team up with the people, with the big companies that can execute at speed, I would say. Maybe the last element, and that's something that's more and more visible. There is increasing important role of international capital from Middle East, from Europe, from global infrastructure funds. All of them are now firmly embedded in the Greek investment landscape, something that was difficult to get investor a couple of years ago. Today, we have a big list of investors willing to commit there. So, to take a broader picture, I think we can say that the market has matured significantly. It offers a combination of strategic assets, regulatory stability, strong sponsorship, and most importantly, available financing for that. So, a quick answer, I think it is magnet.
Thank you very much. Thank you.
Thank you.
Mr. Sachinis, water. I think the most valuable word, especially these days. We're aware about water shortages. We hear about major water management projects to be implemented in this very short future. What do you think are the key investment priorities for the implementation of these projects?
Okay, first of all, let me give you the state of play in Greece regarding the water industry. You have two large companies, one of them being EYDAP, the company of which I'm the CEO, and we represent about 40% we offer service to about 40% of the Greek population. You have another listed company, which is EYATH in Thessaloniki, offering service to about 10% of the population. And then you have 750 companies across the country that provide services both for potable water and for irrigation water. So obviously that needs to change, because what we need in Greece is resilient, efficient, and sustainable infrastructure. And when I'm saying sustainable, I mean both financially and environmentally. So we need to change our thinking from project-based thinking to integrated asset management. We need to think bigger and in bigger projects. And along these lines, there are changes happening across the country, and one of the first changing is EYDAP's expansion. And the government has decided to have EYDAP expand into territories near EYDAP. So we're going to go into Evia, Viotia, and Fokida, three areas close to us that will increase our customer base by about 10%. And also expand into agriculture, which is interesting because irrigation and agriculture. It's interesting because that represents across Greece 80% of the consumption of water, and is probably the area where you have most of the water losses. So really, you need to see water as an integrated effort, so that you can maximize the way you use it and optimize the way you use it. So the result for us is we're going to be completing the water cycle, including water recovery from our water treatment plants and everything else that we can do in these areas. And we hope what we do in the next year or so is going to be a model even for the rest of Greece. Now, all of these things need money. So just for EYDAP, for over 10 years, we have a 2.5 billion investment plan that we work together also with EIB on, and it is actually along the investment guidelines and priorities of the European Union. Also, there is additional money that the state needs to spend on drought prevention. And there, just for Attica, we expect that they're going to need about half to 1 billion. And then my understanding is that for the rest of Greece, there's a need for investments of about between 10 to 15 billion. And there are already, the Ministry of Energy and Infrastructure already has 2,000 projects in front of them that they need to figure out how these projects are going to move forward. Now, how is all this going to be financed? How are all these projects going to move forward? There is a significant change that has taken place, and actually we'll see the results in the next couple of months or so, is the first application of the new regulatory environment. The new regulatory environment is a regulatory asset based environment, and basically the tariffs are going to be based on that, and they are going to be all about cost recovery. So the projects are going to be pre-approved, you're going to do the projects, you're going to collect the money for the projects that are needed to make sure that there's an interrupted service for both water and wastewater. But that's a lot of money, though, and you want to keep the tariffs low, and that's important, so you have to balance that. So obviously there you have money from the European Union. Out of the 2.5 billion euros for EYDAP, 1 billion of that is financed by the European Union. We have a line, a 250 million euro financing line from EIB with low interest rates in case we want to use it. And together with the implementation of the new regulatory framework, we believe we can go forward with the investments, at least at the EYDAP, without also risking increasing our debt too much, because the regulator is also putting a limit of debt at 40% debt over equity. And I think we're going to be at that level, and that's important to have that balance. We don't want to have the issue of Thames Water in London or anything like that. I think we're going to avoid that. But at the same time, in order to do this the right way, you need to follow best practices, and we do that. We communicate, and we know all the CEOs across the world, from Singapore to Tucson to wherever you want around the world, and we work together with them. We have a very strong R&D unit, and we employ some European money for these R&D efforts. It is how you can figure out through best practices, performance, interoperability, life cycle costs, how you optimize all these things. And we're doing that with our Psyttalia wastewater treatment plant. We're starting with an engineering study of that. It's going to be a big one, and the goal there is to make it zero energy and zero carbon facility, and I think it's going to be a model facility for all of Europe, because it is the second largest facility in Europe for wastewater treatment. We're also using best practices, not from abroad, but even from within Greece, with our new smart meters. We follow on the steps of what the VA did in electricity, and how they structured the deals, and how they structured the tenders, and so on, so we can gain time on that. And also, our investments support climate resilience, which is also important, because it is easier to get funds from the European Union if it is all about climate resilience. And we're doing that with our drought risk mitigation projects, and one of them that is going to bring additional water from 2 rivers in the western part of Greece, and all that with gravity, which is very, very important. Zero cost to bring it in. I mean, you do the investment, and then all the water comes with zero operating cost. Also redundancy across our system, because it is important to have water 100% of the time, and compliance with the regulatory framework. Contractors, and we have 2 of them being represented here, are very important in all of this. We couldn't do this without good contractors, and there needs to be good quality and long-term outcomes rather than short-term costs. So we need to be very careful of how we deal with that. And on our side, we just invest on oversight, robust oversight, because it is important to get good quality results out of the projects that we do and out of all these investments. It is important to keep in mind the circularity, the whole water cycle that I mentioned earlier, the energy neutrality, the reduced environmental footprint. That's all we're all about. All of that aligns with Greece's green transition. And really, our vision for EYDAP, and if not just for EYDAP, for all of Greece, is that we need to have a modern water and wastewater infrastructure, and a system that protects public health, supports economic growth, a system that stands resilient against all future challenges.
Thank you, Mr. Sachinis. It's very good to hear that there is a solid plan for future water and water management projects and systems. Very good to hear. So, Mr. Sigalas, what is, in your view, the outlook of on Greece's infrastructure sector. What opportunities do you see in Hill International, having in mind also the European Union strategic priorities?
Absolutely. Good morning, everyone. Echoing the views of my fellow panelists, despite challenges that we're facing that are inherent in construction and the execution of construction projects, in the Greece's infrastructure and construction sectors, the outlook is distinctively positive. This is driven by major CapEx programs that are currently under full swing implementation, but also a robust portfolio and pipeline spanning infrastructure, buildings, energy, and technology data center projects. Few very high-level figures to put today's construction activity into perspective. The backlog of just the big four Greek contractors, two of them, of course, are represented here, has more than tripled since 2019. It is reaching now close to 18 billion US, and of course, with all the projects that were discussed, it's going to continue to rise. Now, against this backlog, the average burn rate of this backlog, meaning the pace of implementation and absorption of these funds, is close to 3.54 billion US. This means that the backlog in its own right provides a clear runway to the sector, at least until the end of the decade. And notwithstanding these macro indices and the airplane view, on the ground there are major programs with a baseline time schedule that already extends beyond 2030, specifically. The Athens International Airport, the planned expansion, future phases of the Lincoln program, the metro project in Athens and Thessaloniki, highly likely the north axis of Crete, and several more. So circumstances are positive and promising. At the same time, there is no room for complacency, because the hard work is due now to do what? To prepare the next day of our sector, venturing into the new decade. And this has a two-pronged approach. Domestically, we need to timely plan and prioritize the maturity of strategic projects, but also adding to the mix the maintenance and upgrade of our existing infrastructure. But also internationally, we need to invest and nurture opportunities, because Greek firms have a key role to play in cross-border initiatives across the Balkans, but also looking ahead in conjunction with Ukraine's reconstruction program. And the latter, this outward approach and thinking, is particularly relevant and increasingly important, considering what you mentioned, the European agenda, but also the US agenda, strategic agenda. And taking a step back, Europe right now has three main strategic pillars or priorities. This is defense, energy, and AI and technology. And notably, the success of all largely depends on the timely delivery of infrastructure. Defense, for example, it's not just about weapons and arms. A central component of the European Defense Readiness 2030 plan refers to the so-called dual-use infrastructure, intermodal transportation networks, ports, airports, rail, and motorways to support the mobility of both civilians and the needs of military. In energy, and it's the topic of the next panel, the US strategic agenda is explicitly and openly the export of LNG and increasing exports to Europe. Therefore, infrastructure is again key for entry points and distribution, especially in our region and the vertical gas corridor. Not least, we hear statesmen now and industry leaders changing from energy transition to energy addition. And in PTEC recently, Greece announced bolder, more assertive steps for exploiting its hydrocarbon resources. Of course, it's going to take time, we understand that, but definitely an undertaking that we're all rooting for success, because it's going to be a game changer for the country. So, concluding, against this backdrop, the outlook is positive. The country is well positioned to capture emerging opportunities that appear on the horizon for the benefit, of course, of the Greek economy, Greek businesses, and Greek professionals as well.
Thank you very much, Mr. Sigalas, for this valuable insight. We have 3 minutes, so I think I have one last question, common for all of you, for a very, very short answer given the time we have. Mrs. Lazaridou implied in the previous panel, we heard Mr. Kostopoulos about national champions. Do you think for the infrastructure plans that are going to be implemented, Greece needs to have its own national champions? It's a European discussion, not only a local one. Mr. Sigalas, I will start with you from you.
Absolutely, absolutely. And I will leave the stage for the contractors to, because I don't know the appetite for integration. But we definitely need consolidation. It was mentioned also on the M&A panel earlier, in the consulting and the design, which is upstream and very critical part for delivering projects in Greece. And another element I would like to mention that we have been publicly vocal about is, with all this activity in Greece and the successful Greek startup ecosystem, we have a distinctive opportunity to bridge these two worlds. And why not create Greek champions in the infratech space?
Mr. Sachinis, we heard about 750 entities in water business.
The issue is, and I'll talk not just about water, but more general. Just keep in mind that Greece is 1/280th of China and India together. Okay, so that shows how small we are. Okay, so you cannot go with smaller companies. You have to integrate, you have to bring everything together in order to be able to be competitive and bring results.
Thank you. Mr. Mietkowski.
I should not be allowed to answer that question. I'm an investment banker, so my answer is obviously yes.
Mr. Mitzalis.
Because of the peculiarity of the Greek market, construction market, Greek companies needed to become resilient in bad times, and this way we became champions, I believe. The champions at the national level are necessary, and we already have them, in my opinion.
Thank you. Mrs. Lazaridou, the last word for you.
I think that we need Greek regional players. We need innovative and extrovert Greek companies that will amass volume, will have a significant market share, and also we need companies that can identify the blue seas and avoid the red seas.
Thank you very much. I think we have left out of time. I think we could discuss for hours on this very interesting topic. Thank you very much, all of you, for this valuable input from each of you. Thank you, the audience, for watching us, and all the best for the continuation of the program.